I wanted to make this quick video to talk about whether we should keep some cash or stablecoins on the side when it comes to investing. And keeping some cash or stablecoins on the side, of course, it will smooth out the volatility. You have less volatility, but you might also be missing some upside. So we need to look at different factors to understand whether we should keep more or less cash on the side. And no one can be certain, but we can have some clues. And I think the first thing to understand is that if you have, let's say, 50%, for instance, in Bitcoin and 50% stablecoins, and Bitcoin tomorrow crashes by 50%, your portfolio will only decline by 25%, right? Because the half that you have in stablecoins didn't do anything. But the same for the upside. If tomorrow or next month or next year, Bitcoin doubles in price, your portfolio will only go up by 50% because the other 50% is in stablecoins. So stablecoins will give you, of course, will help you to smooth out the volatility because it doesn't move, but it will also give you no upside. So we need to strike this balance by, I think, first, number one, looking at your risk appetite. So if you are a bit more conservative person, maybe having more stablecoins, it's okay. Less conservative, if you are very aggressive, you can have less stablecoins. And the fact is that historically, and there are some academic papers talking about this, historically, keeping zero cash is the best strategy for your long-term returns. Okay, so if you want to look only at like the historical returns, the best thing in the stock market, in crypto, is don't have any cash. Okay, but we are human beings and we have emotions and we have different investment time frames. So no one can be like, oh, don't have any cash, because even Berkshire Hathaway, Warren Buffett's company, they have at the moment $339 billion in cash, which is like 20 something percent of their portfolio in cash. So even if Warren Buffett is keeping such a huge amount of money in cash, well, who am I to say not to keep money in cash? But historically, supposedly, like if you have zero cash, it will be the best returns possible because no one can time the market. And by having some stablecoins or cash, we are kind of trying to time the market. What we are saying is that, oh, we believe that better opportunities will come, and so we want to have this cash. But talking about better opportunities, yes, I also have some cash and stablecoins. I have around 15%, I think at this precise moment, 15-20%. And we need to understand where are we at in terms of market cycles. So in the current market cycle, we are close to all-time highs, right? Bitcoin and crypto just had a correction over the last few days, but we are still close to all-time highs. Gold is all-time highs, and stocks and Nasdaq, S&P 500, everything is all-time highs. So I prefer to have more cash when we are all-time highs because the market is building up risk. And if we crash, if we have a market correction, now I have cash to buy the dip, right? So I think this is a very important thing. If we were in 2022, when the market was in downtrend and Bitcoin hit like 17,000, I had zero cash. All the money that I could save from salaries, from the side income that I have, I would invest 100%. In fact, in 2022, I even got a bank loan to invest, and that was a great timing. Why 2022? Because markets were like down the toilet drain, and it was a great opportunity to buy cheap stocks and crypto. So if we were in 22, I would say probably keep less cash because it's a good time to buy. Now maybe not a good time to be all in, right? Another thing is whether you have a good and safe yields for your stablecoins and for your cash. For example, at the moment, Aave is the biggest DeFi lending protocol. You can get 4.6% yield on your USDT in USDC. Camino is like similar to Aave, is a DeFi lending protocol on Solana. It's also pretty safe, and you can get 6.3% on USDC and 18%, 18% on USDT. So it's pretty good. So this is also a factor. Like, okay, if I can get from my stable coins, I can get like 10, 15, 18% yield. Okay, maybe that's another reason to keep some money in stablecoins. And probably once we are in a bear market like 2022, these yields will go lower, and it's also at the same time a good time to deploy that cash. And also I think it's very important to understand whether you have the capacity to continue saving money in the future, right? So if you have your job, you have some passive income, you have a business that generates income every single month, then maybe you can keep less cash and less stable coins because you have money coming in every month. So you have new fresh cash entering your bank account every month. So maybe you can have less cash. But if you have little or no capacity to save every month, then it's actually a good reason to have some cash. So I'll say those factors you need to consider in when it comes to have some stable coins in order to protect yourself from volatility, in order to eventually being able to buy the dip if the market eventually crashes, because markets don't go up forever, right? And I think that's the key takeaway is historically, if we are like absolutely rational investors, if we are machines, you just invest 100% of your cash and maybe less stable coins. But we are human beings and we need to stomach volatility, which is not easy. And we all have different, risk appetites and so on. So yes, it's important to keep some cash on the side. At the moment I have, when it comes to crypto, I have like maybe 15% of my money in stable coins. And then when it comes to stocks and other investments, I also have, at the moment, maybe like also 15 to 20% in cash. Anyway, I hope this video was useful, and I'll see you soon.